welcome to another episode of Traders TV. Within the trading community, there's something called indicators, something that traders use to give them an edge in the market. Now, whilst no indicator is going to work 100% of the time, it can be useful to provide a possible edge in the market. In today's episode, we're going to concentrate on the MACD Oscillator. Let's get started.
So the MACD is a trend following momentum indicator that uses two different moving averages and plots the relationship between those two different moving averages. Typically, the most commonly used settings for a MACD is the 12 moving average and the 26 period moving average. And essentially, what a lot of traders are using the indicator for is to look for when moves are potentially running out of steam. So it's not a timing indicator telling you to get in right now. It's more of a warning indicator to say that potentially this trend may be coming to an end at some point. So it may be losing a little bit of momentum. Of course, there's no indicator out there in the world which is going to tell you exactly where to buy and sell and get it right 100% of the time. Of course, that doesn't exist. But again, we're just looking for an edge in the market. Okay, we're looking for clues in the market that we can use or try to use to our advantage. So let's have a look at the MACD. So at the bottom here, you can see these bars and this moving average is what we call the MACD Oscillator. And the key way that traders look at this or analyze this is to look for divergences. Okay, so as we can see here, price just keeps on getting lower. And we can see that because each low is lower than the previous low. Okay, so each of these swing lows or these cycle lows. Now, as the market was going down during this period of time, we can actually see that the MACD was actually pushing up. So we had what you call a divergence. Price was going down, the MACD was pushing higher. So this is suggesting that at some point this move lower is running out of steam and there's a high chance or likelihood of a potential reversal at some point. Other traders may start to incorporate other tools to help identify and give an extra edge on where potentially that point could be. But really, the best way to use the indicator is just to pick up the clue of potentially something happening. So we can see the divergence here in the MACD, suggesting that this move to the downside is running out of steam and there's a high possibility of a potential reversal. Now we can also see at the very top here, the market was starting to make higher highs. So each swing high was getting higher than the previous high. But during that period of time, we can see the MACD was pushing lower. So this is an indication that this move to the upside is potentially running out of steam and there's a likelihood of a reversal at some point. Okay. Now, this is an example of, down here is an example of what you call a bullish MACD divergence, because it's suggesting this moving lower is running out of steam. We may see some more bullishness. This is an example of bearish MACD divergence, because this move to the upside is potentially running out of steam. It may get a little bit more bearish. Now, sometimes the indicator, for example here, is not going to pick out everything. So when the market was pushing lower at this point, the MACD was actually just following it quite well. And the market pushed up anyway, even though the MACD didn't give any kind of divergence. And it's the same thing at the top here. The market just kept on pushing higher and the MACD just kept on following. Okay, so there's examples here of the MACD actually working out as the oscillator is used for, warning of a potential turn in the market. But there's also some examples on where it doesn't give the indication and the market turns anyway. Okay, this is why with any indicator we're just using it as a potential clue, just something to give us an extra edge in the market if possible. Nothing will work 100% of the time, but this is why we also don't rely just on one type of tool. We use a variety of tools to help make trading decisions.
So now you know a little bit more about the MACD oscillator and how it can provide winning but also losing opportunities. If you want to learn a little bit more about Learn to Trade and who we are, then click on the link below. I'll see you on the next video.